Hello, everyone. Welcome to 2026. This is Roger and Annie with our first federal podcast of a new year. Annie, Happy New Year. How you doing?
Same to you, Roger. I can't believe it's January 2026, but
I
here we
know.
are.
Yeah, what happened to 25? But we're into 26 and trying to recover from wrapping up 25. And we're going to do a little something different. Our last podcast of 25, Annie and I dealt dug pretty deep into the big beautiful bill,
hmm
and the things that are going to impact your upcoming season. And we're going to run through those quickly, but we're really going to spend some time talking about something that I think is equally as important that we don't focus on and as much as we should, and even particularly at this time of year. And that's just we'll call it practice management, but it's a lot of different things that we need to make sure that we are handling, because running a tax return business is more than just knowing the laws. There's a lot of other elements to it. And in fact, we could probably spend an hour on each of these topics. Annie and I,
Certainly.
through in our working time at Paget, have dealt with a lot of practitioners over the last decades, and most of the things that we're going to talk about are things that we see both, and it's not unique to Paget offices or only in
No,
Paget offices. It's the industry, and kind of some things that we've experienced, and hopefully talk you through some things that maybe you can do to make your business a little bit better and focus on them before the season starts. So that's what we're going to do. Annie, how's that sound?
sounds good to me.
All right. Well, let's go through and spend a little time kind of in case I would encourage you to go back and listen to the podcast that we ended 2025 with, because we dug pretty deep in some of these topics. But Annie, let's kind of walk through some of the tax law, some of the big beautiful bill stuff that's going to impact us, and some IRS stuff that is going to be relevant to the
Sure,
tax season that's coming around. So take
sure.
us away.
And I'll start with, as of today, we don't actually have the official announcement from Treasury on when the start date of the 2026 season will be.
All right.
Typically, in previous years, it's been late January. I'm going to hope for late January. I will say, given the magnitude of one big beautiful bill, could be February. I mean, I'm not saying it's February, but definitely going to be something to watch for. We did get just today or yesterday maybe that the IRS will begin accepting business returns on January 13th. So that could be an indicator or sign that we might get an announcement in the next couple of days as far as when the opening of the individual filings will go. As always, April 15th seems to be the deadline. It's been years and years and years since that date has been moved. Obviously, we always have our extension. So
Right.
I don't anticipate, a change in the deadline filing date, original due date, I should say. But we'll see. I do, like I said, we're going to highlight a couple of the new deductions, the new provisions that are in effect for 2025 as it relates to OBBBA, and it is going to make this tax season different. Different
Right.
communication, different preparation. Software is going to be changing. What you collect and the questions you ask from your clients are going to be a little different this year. So, keep that in mind as figure out your bandwidth and figure out how you're going to proceed with your tax season. But
And how are you
you've
going to
got
communicate with
this.
clients? Because as you mentioned, this is new to them too.
Oh, absolutely. You're gonna get questions you normally wouldn't get from clients who usually just drop their stuff off or send their stuff in. So give yourself some grace. I will, say I do anticipate a regular start to tax season, maybe a little delayed. If I had to guess, I would expect the states to actually be the ones that are more delayed. Kind of they piggyback off the feds. So it could be that state returns are the ones that see a greater delay in being,
Right.
finalized forms and that kind of thing. But
Yeah, the season could open, but it wouldn't be ready for all returns. There could be forms that aren't ready yet. There could be
yep,
states that aren't ready yet, but hopefully they'll get started. I mean, there's no indication it's going to be delayed, but we
right,
just don't have a date yet.
right. So, as we've talked about, like I said in previous webinars, some of the new deductions, new provisions that will affect 2025 tax returns. One that's obvious, we've heard a lot about, is no tax on tips. This is retroactive for 2025 through 2028, and it includes cash tips, where what's they're saying is customary and voluntary. The IRS or Treasury came out with a list of 68 occupations. They put out codes. We've received some information about how to report that, what form, the form Schedule 1A. Just a reminder, there are some limitations. The deduction is capped at 25,000 per taxpayer. There's also some AGI limitations there. And so as you move forward, collecting data, asking for information from clients, just keep in mind that this is on the federal level. It does not affect the state. You'll have to kind of figure out what states are following what procedures. We've gotten some commitment, I guess, that, the tips box on the W-2, that box 7 has always been there, so that amount can be used. We've also got sort of a get out of jail free card,
Yeah, for this
as
year.
far as this year for both the employees who, hopefully can work with their employer to figure out a reasonable amount of cash tips or just tips in general, but as of right now, it's pretty lenient as far as it goes on kind of estimating, a tips for employees. I do think the tax practitioners and interrupt me if you think I'm speaking out of hand, but I believe the tax practitioners will also see some lenience when it comes to, did you do your due diligence when reporting this? Did you ask the right questions? I expect to see that. Do you agree, Roger?
Yeah, I think so. I mean, they've basically given the employers some leeway this year. They've given
Hmm.
the tipped employees, and the same holds true in overtime, which we'll talk about in a minute. So I
Yeah.
would expect that to translate over to the practitioners as well. I mean, that doesn't mean we can just be careless and not,
Right.
and just blatantly not follow the rules. But I think we all understand that anytime you get retroactive tax legislation, and at the same time, you're getting cutbacks at the IRS and fewer people and things like that, that
Yeah.
hopefully there'll be some leniency, but, we'll see.
Right. And this year, you'll get questions. There was this whole idea of, when it was no tax on tips, like all of a sudden everybody who's in a, tipped industry would all of a sudden see this like, massive increase in their paycheck and they're gonna get the money right away. Well, for 2025, you're not gonna see the taxpayer's not gonna see that money until they file their tax return. Going forward, you can make adjustments to your W-4 so that you can kind of reap the benefits as the years go. So that could be something you get a question from your clients like, how is this going to work? And how come my paycheck hasn't changed? Or what is this going to mean for my refund this year versus next year? So just be prepared for those types of questions.
Yeah, and if your clients are paying attention to the news,
Mm.
particularly the Republicans are telling everybody to expect these huge refunds this year. Uh,
Right.
so you're gonna have people maybe coming in earlier, which is a good thing
Yeah.
because they
Want their
want
money.
their money, but who knows what in their mind they're anticipating their refund being. But the Republicans keep reminding people your refunds are gonna be significantly larger this year because of all the changes that was made. And that in theory should hold true, but
Yeah.
obviously we
Tax
know
rates, all
yeah.
those types of
But,
things are,
but things
adjusted.
can change. Other things can change that, maybe so I think we're gonna have people coming in expecting big refunds, so hopefully they'll get them. Because guess who they get mad at if they don't?
I know. I know.
It's us.
Yeah. So the other big one that we've also kind of beaten to death over here is no tax on overtime. Again, 2025 to 2028, there is a cap deduction there of 12,000 for individuals and 25 for joint filers. Just a reminder, overtime pay is subject to FICA. This is only exempt from federal income taxes. Employers are kind of free from penalty again, and employees should try their best to request information. There's nothing already on the W-2 with a box
No.
for overtime. So this will be a little bit more difficult. I think for employees and employers who are not used to having to track this type of thing, especially if it's in one of those 68, codes or whatever. But I would keep your eye on that. I don't expect any additional guidance. We have received some it was right before the end of the year, kind of some examples about, well, if this, then you can do, 1.5 or 2 times this, or that kind of thing, divide by a certain amount depending on how the overtime was paid. Again, I expect leniency on this. The form Schedule 1A has been updated to accommodate for this deduction. So, I mean, anything more really on overtime, Roger?
I think the only thing I do expect there'll be leniency, like you said. I think
Yeah.
the things that we have to make sure we're aware of is this is only overtime based on the Fair Labor Standards Act. So if you
True.
have
Good
a
point.
client working somewhere else under some other set of overtime rules,
Unions or something, right?
yeah, so we need to be careful of that. And remember that it's only the incremental additional cost of the, and I use the same example every time we talk about it. If you're earning
That's okay. It
$10 an
makes sense. It
hour
makes it easy to remember.
and you get 15, it's only on the additional 5. So I think if we kind of follow the big rules, I think they'll give us leniency because, again, send them back to try to get something from their employer if they
Any
can.
documentation, any
Any
kind of
is better. But I think as long as we try to follow the rules as stated and don't do something stupid like giving them the whole 15 instead of the
right.
5, or not recognizing that they're not getting under Fair Labor Standards Act, if we're off a little bit from the actual calculate. I don't know how the federal government, if we don't know it, I don't know how the IRS would know it. But
Yeah.
I think if we just try to avoid the big holes and the big mistakes, we'll be okay for this year. Who knows what it'll be next year.
Well, yeah, next year reporting is gonna be, should be different.
Small business owners are going to probably get some reporting burdens on those
Yep.
2 items for 2026, and that'll be good for the employees and bad for the employers.
Yep, additional work there.
Eh,
Let's see. Next up is the senior citizen deduction. Again, this was new, goes back to the beginning of 2025. This is a $6,000 deduction from taxable income. This is on top of the regular standard or itemized deductions. It's for taxpayers 65 and older. If you're married, you have to file a joint return. The credit has some phase outs and some income levels, but this one's pretty basic. Should be very easy to determine and to report. So I don't see a lot of controversy or pending questions as it relates to that one. The next one is the car loan interest. This we actually have received several bits and pieces of guidance.
Yeah.
If you remember, this applies to new cars whose final assembly is in the US. The deduction is reduced by a modified adjusted gross income, so there's some limitations there. But the deduction is up to $10,000 of interest paid or accrued on a post 2024 loan to purchase a qualified vehicle for personal use. We've gotten some kind of tips on how to determine what that means, final assembly in the US. Most common way to determine is the VIN, the vehicle identification number. There's a website that has a decoder. I'm learning all things I did not
That you
know
ever
before
thought you
this.
did. A decoder sounds like some kind of decoder ring that your kids play
Yeah,
with.
exactly.
Star Wars thing.
Exactly. So there are some, hopefully the dealerships will be helping out. Hopefully, the vehicle information label and the VIN number will help determine whether or not this car does qualify for final assembly. So again, I think this might be a little tedious, but I don't think it's going to be difficult to determine.
Yeah.
Obviously, you may get a client that comes in and is like, "Well, I get to deduct up to 10,000," and they kind of miss the whole part of, it's got to be a post 2024 loan. It's got to be a passenger vehicle. It can't be, it's only for personal use, not for business use. And then again, a final assembly in the US.
Yeah. And I
Carry
think on the things we just covered, I think you may have some people coming in that are confused about the senior deduction because during the campaign, we heard no tax on Social Security.
Oh, good point.
That's what they talked about in the campaign, but that's not what the law. So people
Yeah.
who are expecting their Social Security to be tax free, they may get the senior deduction, but they'd still have to report to Social Security. The other thing, and this is just an observation, I am surprised, and maybe it's just where I live. I haven't seen any of the car dealers advertising, come buy a car, interest is deductible. I expected, there to be people pushing people to buy automobiles now that they can
Yeah.
write off the interest, but I haven't seen that yet.
Usually we get a lot of those advertisements, like, "Come spend your refund on a new car," kind of thing.
And now the
So they
interest is you could write off.
Yeah,
It's
yeah.
almost free. Come get a car. It's all
Right, exactly, of course. Yeah, I haven't heard too much about that either, so we'll see.
okay. Last thing, Annie, talk about
Yeah,
Trump
just one
accounts.
other thing. Those Trump accounts, these are designed for children under age 18. It's kind of a new structure of a traditional IRA type thing. Basically, it's a tax advantage saving account to promote savings. The maximum contribution is $5,000 per, I guess, like your grandma, your mom, a individual. Employers can also contribute. The kicker here is that when it is set up, it must be designated as a Trump account. So a little step there. Obviously, there's some other minor details. You got to be under age 18. You have to have a social security number. You can only have one account per child. It can be established by the parent, the guardian, or the treasury. So just little things to remember there. The fun part is that $1,000 contribution by treasury will be deposited into the Trump accounts for children born between 2025 and 2028. So you might get some free money there
That's
from
right.
Treasury. Was set up as a pilot. I've heard it referred to as sort of a pilot program. I don't know how they're going to evaluate pros and cons. I did see that there was a request for public comment about these. I don't know if that has ended or not, but something different, obviously new, beneficial. And I guess if you have kids born between 25 and 28, hey,
They
free money.
Yeah,
um,
free money. I've seen, and I don't know if this is funding the 1,000 or gonna be in addition to it, but a bunch of billionaires have come to Trump and said, "We'll kick in all this money to help fund these accounts." So I don't know if that's to take some of the burden off the federal government, and
hmm.
some states are talking about also contributing. So
Yes, I
you
did
need to
hear that
see
too.
what's going on in your state to see if maybe there's more than 2,000 or more than 1,000 that could be put into one of these accounts. So, yeah, it is a pilot, whatever that means. I don't
Yeah.
know. I don't know how you decide to end it, and if you end it, what happens to the money that's in it, and but we'll worry about that when we have to.
Yeah, so and this should be an easy one to run, in your software. Obviously, you're looking for dependents that were born between this time and then having that conversation. I bet tax organizers, at least ours that we are using this year, have, questions. Do you have children born between here? Are you interested in a Trump account kind of thing? So it might be a talking point, but, it should be easy to navigate which clients you need to talk to about this.
Yeah, it's more an advisory role that you can
Yeah.
play. Tell people that, are you aware if you have kids that fall into the right definition that this is
Mhm.
available? Because I think I'm right. There's nothing we do on the tax return this year.
No,
It's
you have to set up the account and then designate it as a Trump account, so I think it's outside of the filing of the tax return,
right.
but it is something that is going to need to be handled by some retirement plan coordinator or
No, yeah,
perhaps there might be do-it-yourself kind of thing on a website. I honestly I'm not sure.
yeah. But make sure your clients who would have someone who might be eligible for this, that you at least make them aware
Tell
of
them,
it.
right,
Yeah,
right,
that's about all I think you can do.
yeah. Alright, that's all kind of recap I have from, like, the big stuff,
Yeah.
from
There's
OBBBA.
obviously a lot more in the BBB, but, we just wanted to touch some of the things that we've touched on probably ever since the bill passed, because those are the things that we think are gonna impact you. Again, I would encourage you to go back and listen to our webinar that was, uh, available at the end of last year. We go into more detail on these and a few other things, and then, again,
Mhm,
depending on your client base, there may be things that we didn't touch there or today that you wanna, talk about or
yeah.
get familiar with. What we want to switch over to now is something, and every time we head into a tax season, and Annie, you and I have heard these stories, and again, both with inside pageant and outside, where you hear these stories of people working 7 days a week, 18 hours a day, and
Mhm.
that's no way to live a life. That's no way to work. I mean, it's unsustainable. It penalizes your family. Uh, it hurts your value of your business if you ever tried to sell it, because a buyer is gonna look at that and go, "I don't wanna do that." And
Yeah.
that's kind of what you're stepping into if you buy the business, you're taking the place of the owner who was doing that. So it not only hurts your work-life balance in real time, it also hurts the marketability, which really deals with succession planning. Because I mean, I'm hoping and thinking that most of you that have a firm are doing it, number one, for the income it produces on a year-to-year basis, but also to have an asset that when the time comes to get out of business, that you have an asset that people will want to buy and will pay you again. That's the beauty of owning your own business, is you get two bites at the apple. You get the income while you're working there, and then you get that second bite when someone wants to buy it. But we need to make sure that we have something that people will want to buy.
Mhm.
And so we're just going to go through again some things that we've seen, some things that we've touched on, maybe get you to think about them before you get covered up in the, this is a critical, not a critical, this is a great example of when you hear us, and you may have heard us say this on a podcast, we spend too much time working in our business, not on our business.
Mhm.
In our business means we worry every day about preparing a tax return. On our business is make sure we're making money, we can hire people, we have a good pricing structure, we have a marketable business. That's working on your business, and we just don't spend enough time doing that. So we're going to spend the next 30 or 40 minutes going through some of these things. As I said, we could probably spend an entire podcast on most of these
Yeah,
topics independently.
we've
Yeah.
done presentations that have been 2 hours, for our franchisees, understanding kind of how to make tips for making your tax season manageable but still profitable, keeping your work-life balance intact, so.
Yeah. So we're going to go through a lot of them. We're going to touch on them. We're not going to be able to get in as much detail as we would like to. If you like these kind of topics, let us know. We'll
Yeah,
spend
sure.
time digging into one of them, or reach out to us and we'll talk to you. But
Yeah.
anyway, you want to start?
Let's kinda start with the practice management part of it. I guess the term bandwidth or capacity is something that is, I don't have enough employees, I don't have enough hours in the day, I don't have enough bandwidth to get all these things done. And so I would encourage, before the heat of tax season, try to determine, which clients are coming back. Maybe are you having new clients? How many new clients? How complicated are those new clients? Are some leaving, going elsewhere? Are they, going on their own? To kind of try your best to figure out, okay, these are my clients, which staff is assigned to it. If it's a historical client, what kind of time was allotted for the engagement? Does this client always come in late? Are they always knocking on your door, as soon as they get that W-2? Do you need to set dates for clients? Like, do you need to say, if I don't have your information by X date, you're going to get an extension, or if you don't get back to us, you're going to go to the end of the line, kind of thing. I do think, it's not going to be perfect. No one's going to know exactly. Clients could be very simple for a couple of years, and then this could be a complex year, additional time. You never know. Staff could get sick, a new staff could come in. So it's not going to be perfect, but getting an idea of what your goal is it 40 hours a week, cranking out X returns, or, it could be a turnaround time goal, bandwidth goal. So think about, your past and what you would hope this new tax season would allow as far as, bandwidth goes.
Yeah, and the big thing, I mean, every time you talk to somebody, they say, "Well, I have those rules." But do you really have those rules? I mean, number one, having a rule is only a rule if you mean it. And sometimes we tell people, "Well, if you're not in by April 1st, X, Y, and Z is gonna happen," and then they come in April the 10th and nothing
Yeah,
happens.
yeah,
Um,
that's
so
true.
set rules, but stick to them so that there are consequences for bad behavior. What we're
Hmm.
gonna talk about is there's a certain group of people and associations and organizations that impact our tax season. Obviously, our staff does.
Yeah,
We do. We're part of our business. The IRS does. We've talked a little bit about what could happen if they don't start on time. That will impact us. Our clients are hugely
of
impactful
course.
on how well our tax season goes. In some years, Congress is, in the sense that they could change things on us. I don't know that that's going to happen this year, but we've got to understand where each of these groups of people impact us and anticipate the impact they're going to have on us. One of the things that drives me crazy is, and this is a broad discussion to kind of follow up on Andy said, A lot of you I hear, well, I quit taking clients. I'm too busy. But then you tell me how many bad clients you have. Well, I don't know why this doesn't make sense to anybody but Annie and I. If that's if that's what you're saying, then get rid of the bad clients and replace them with better clients that you are now turning away because you're too busy working with the bad clients.
Mhm.
We are in great demand right now. Good tax preparers and good tax professionals are in demand, and you should never be turning away good clients to protect bad clients. Uh,
Yeah.
and good clients are defined in a lot of ways. They got to pay you the right amount of money. They've got to follow your rules. They've got to uh, do their part to make this a positive experience. And don't tell me they won't follow rules, because they follow everybody else's rules. They'll follow yours if you have them. You know,
Well, and, similarly, I hear all the time, "I can't raise my prices because my clients are gonna leave." Well, if you have fewer clients that are paying higher prices, you're actually working less and making the same or more. So
right.
that's nobody wants a client to be like, "Well,
That's a good
I'm
result.
beating." Right, right, and
Yeah.
so I think the whole right sizing or right pricing, is really important. Nothing's getting cheaper, at least I haven't seen a single thing get cheaper
Nope.
in quite some time, so I hope that everyone is raising their prices, just like the rest of the world. But even this year with new legislation is going to be more complexity. I mean, it should be a no-brainer to a client why you would be, raising your prices. So try not to worry so much about losing a client, especially if you're turning away clients who would pay that higher price.
Yeah.
There's
Yeah.
It's a mindset. It's also, I get it. Nobody likes change. It's a little scary, but if you have bad clients that are ugly to your employees or never show up on time or return anything or always, bugging you, consider disengaging before you send out your engagement letters. Consider, I'm not dealing with that headache this year. It wears on me, it wears on my staff. It's not a good relationship.
Yeah, and you mentioned staff. Listen to your staff too,
Oh yeah.
because sometimes the problem that the client's creating is that with the staff, not with you necessarily. So they may recognize a bad client that you don't see as a bad client. But remember, employees are important too, and you don't want to put them in a situation where they're not happy in their work environment. And because you don't want to lose an employee to keep a bad client. That
Oh
again,
no.
none of this, some of this stuff just, but these are rules that we keep saying you got to have them, but you got to enforce them.
Hmm.
And the other thing I'll give you is all of you, I think, believe you're really good at what you do. If we were comparing you to a hotel, you want to tell everybody you're the Ritz Carlton.
You're the
Uh,
5 star.
you're the 5 star. But if you price and act like a Motel 6, your clients are confused. Your prospects are confused, because if you're going to be a 5 star hotel, then operate your business the same way a 5 star hotel would operate and charge what a 5 star hotel charges. Don't say all those things, but then charge less. But by the flip side, don't if you want to have an everyday walk in, do the return while you wait, cheap return, then you have to build your business based on that model
Yeah.
for everything else that you do. And so be consistent in what you want to be and what you are.
I agree. I agree completely. And you mentioned something about your staff. I will say, before busy season gets going, maybe you have new staff. Maybe this is, staff that's been with you for a long time. I think it is really important that you communicate your expectations of your staff. When do you expect them to be in? How fast do you want them to turn around stuff? How many hours are they expected to work? And it could even be like setting the expectation, like I have a closed door policy these hours of the day. Don't come knocking on my door. Don't interrupt me. I will take meetings and phone calls at this time. Schedule the time that you need so that everyone can get work done. And I think if you do that, you will be able to track your progress, your billable time versus your downtime, or if there are certain stressors, like you're having multiple software issues, or I don't know, you're not getting the documents in, or your printer, your scanner. I mean, it could be anything that's causing slow or inefficient work. So I think it's important to communicate what you expect from your staff, just like you would communicate what you expect from your clients.
Yeah.
And I think that's also very important.
And don't be the bottleneck to
Yeah.
everything. Staff develop habits and expectations based on the way they're treated, and if you don't trust them to do something and make it always come to you, they'll figure that out and they'll say, "Well, I'm just gonna do just enough to get it to Annie because Annie's gonna change it or Annie's gonna do it a different way. Why should I get better at doing it?" So, keep yourself from being the bottleneck. Uh,
Good point.
yes, I mean,
Delegation is really crucial when you're trying to get stuff out. If you can delegate to someone who maybe has more bandwidth, it's a win-win.
well, and trust. I mean, if you're gonna delegate, you have to trust the people you know, if they're not qualified to do it, can they learn? And if so, teach them.
Mhm.
If every time they come to you with a question, it should be a learning opportunity so that they don't continue to come to you with that question, and you wanna
Correct.
see them grow and get better. And yes, a new employee with less experience is gonna take more of your time, but you wanna see them growing into people who don't have to come to you, and most importantly, don't feel like they have to come to you.
Mhm, mhm.
I'd rather solve one problem than look at 1,000 returns to prevent it.
Yeah, absolutely.
Um,
Good point there.
so just trust your employees, empower your employees, treat them like you would want to be treated. And for both you and your employees, you've got to take care of yourself. You've got to
Mhm.
have time to exercise, to spend time with family, to
Sleep. You need to
sleep,
sleep.
whatever it is. I mean, you're going to burn yourself out and all your employees out. That's when you're gonna make more mistakes. That's when things are going, yeah, I mean, it's just, come up with a workable, and I think you mentioned it, Annie, a workable schedule of what your office hours are to the public, number one, and what your office hours are to you, number two.
Mhm.
Stick to it. You'll be amazed at what you will do differently if you have those rules and stick to it. Because
Yeah.
if the rule means more than, I don't want to say the client because clients are important, but you'll hold the client more accountable if you have rules that you're willing to enforce.
Yep, just like there's another one that people spend so much time after tax season tracking down collections. Make it
Yeah.
a policy. Do not deliver, do not e-file a tax return without getting paid. It might be one extra step that you have to do per client during busy season, but that's better than chasing down, getting on clients to try to get paid after tax season.
Oh, yeah. I mean, why would you do I mean, again, relate it to how they deal with other people in their day-to-day activities. You know, you can go so far. Yeah, maybe you don't have to pay today, but you've got to give me a credit card or you've got 30 days. But
Deposit or something. Yeah,
but you can't drag me out 6 months because I didn't price that into the work.
right,
That I was going to have to spend time going after you and wait 6 months to a year to get paid. I guarantee you didn't build that into your pricing schedule.
right,
So, yeah, you got to have rules when it comes to getting paid. I mean, in Paget, we just basically have a rule that you don't get the return till you pay for it.
right.
I mean, what's hard about that? I mean,
Yeah,
I,
I understand.
I mean, maybe somebody comes in and says, "Oh, I forgot my wallet. I don't have a credit card. I don't have a check or whatever." And
Yeah,
this person is your best friend for 20 years. Yeah, you may give them their return and say, "I
of course.
trust you," but a stranger? Oh, I'm
Yeah.
sorry.
Or somebody who's been late paying you for the last 5 years, put an end
Yeah,
to it. Say,
yeah.
"This is it."
Stop it. Stop it.
Yeah, yeah,
You work too hard to not get paid or to have to spend 10 hours chasing somebody down. So, oh
yeah,
well.
yeah.
Again, all these things we're talking about are things that we have seen and dealt
Of
with both
course,
inside and
of
outside
course.
of Paget.
Yeah.
And
You're not alone if you're
you are
doing some of
not
these
alone.
things.
You are
You're
not alone,
definitely
but you
not alone.
can have a better work life balance in tax season if you work on it.
And then just one more other point, and I think we've done a podcast on what we kind of refer to as a contingency plan in case of unforeseen circumstances. It happens every year here at Paget. There's sometimes multiple times a year we'll get a call from a franchisee who has gotten sick, or an employee has left, or something that they did not foresee during this time frame, the busy time frame. And having a contingency plan, who knows your password, where are you tracking the status of all your clients? If somebody had to come in and help, or a new employee had to come in, are you prepared if something like that happens? And I know we never, nobody wants to think about that, but I mean, it can be anything. There could be a fire down the street. There
Yeah.
could be a natural disaster in your area. It could be a loss of an employee, sick spouse. You just, never know. You get in a car accident, you're, laid up for a bit. So without going down a deep dark hole, there are some simple tasks that you can do in case of an unforeseen circumstance. And the first one is, who has access and knowledge of where the things they need to continue the business? Where are they? Who's that person
Right.
that can kind of keep things going if you're not there?
Yeah, and again, if you have a large staff, it can be a staff person. Um,
Mhm.
Hopefully, if you've got a staff, you should have this in place because you've got people there that you can keep going on. If you're a small firm with no real employees or one employee, it can be a family member, it can be a
Sure.
friend, but somebody who can come in and at a minimum, the one thing that people always say is they really love their clients and they want to treat them right. But if something were to happen to you as the owner and you were taken away for an extended period of time, your client's life goes on and they need certain things. So think about if you were a client that you say you think are invaluable and the most important thing you have, who needs a document to get a loan or to file a tax return, and
Run payroll.
nobody run a payroll, and nobody in your firm can help them because it's all in your head. That's not a great client experience. It's not really consistent with what you say you treat, how you want to treat your clients. So think about what it takes to keep that business going. Because the other thing that we have seen both in and out of Paget is if something were to happen to where the firm is kind of out of business for a period of time. Sometimes it can be a short period of time, sometimes it can be an extended period of time. As I said, the client's life goes on. They will be loyal to you as long as they can, but at some point, they have to move on and comply with the law and keep their business going or do whatever they have to do. And if they all move somewhere else, that equity, that value of that second bite at the apple we talked about is gone, and it can go quickly. So think about that. Think about, because it's not just, yes, something happens to you, as you mentioned. It could be a fire, it could be a
Yeah.
hurricane, it could be a key staff member leaving that you entrusted all that information to them, and now you don't know what it is. So, uh,
Security breach, we've had to deal with those,
right,
where all of a sudden you're no, you can't, your e-fin's on hold, you can't e-file something, somebody's come in, cybersecurity, something like that. So it can happen.
yeah, have a plan for if these things happen. Don't just hope they don't happen. That's not a plan. Hoping they don't happen is not a
Good
plan.
point. Good point.
Because sometimes they will happen and you need to be able to have your business succeed and your clients be taken care of, even if that means nothing but getting them extensions and letting them, keeping informed of what's going on, and keeping the business going until, God forbid, if you're aren't able to come back, that a successor can step in. Who's the IRS has even put some things, or
Oh, yeah.
something in the
Circular 230.
proposed 230 stuff about identifying another practitioner that is kind of your buddy, and
Mhm.
it should come into how you select softwares. You know,
Yeah.
I think sometimes we brag about how cheap our software is instead of getting the software that does the job that we need. Sometimes we have cheap software and it hurts us in time because it won't do things that other softwares do. So we have to go off software and do it manually. Or it's an oddball piece of software that nobody else uses. And if something happens to me, there's not enough people that know how to use it. So every
Yeah.
decision we make, this has to be considered in what we're doing. You know, whether it's buying software, whether it's hiring staff, but I asked this question: what would your business look like if you couldn't show up the next day, couldn't come to work tomorrow? How long could that go on and you still have a business?
It's a good question, and like I said, we've done an entire podcast kind of on this topic, about having, what does a contingency plan look like, easy steps that you can take, that are not costly. So if, maybe that's a good one to revisit at some point, Roger,
Yeah, yeah,
because it is. definitely
And
something.
we beat the idea of having a written information security plan, and we've had 3 or 4 people on our podcast that got breaches.
Yep.
Think about the time and money that cost you if that happens. So take that seriously. You've heard us say this 100 times. Don't just go far enough to check the box that you have a WISP. Have one,
Yeah.
and make sure that if because the crooks are getting really good.
They're way smarter
I
than
mean,
me.
they are really getting good. So it's not unlikely that something will happen. But what is your plan? What action do you immediately start taking to minimize it so that because it could just completely engulf you in the worst time of year. So
Mhm.
make sure you've taken that seriously, not just, yeah, I've got one. So here, when I get my P10, I can check the box.
Yeah,
That's
and
not
if you
that.
don't know what we're talking about, WISP, Written Information Security Plan, or cyber breach or something like that, you can search our podcast. Like Roger said, we've covered it. We've had guest speakers come on, so it is worthy of, if you're kind of like, I don't know what even a WISP is, take a minute and go back through it. It's definitely worth going through and getting familiar with.
Yeah. What other things should we know? And we're talking about this now so you can think about it before the busy season engulfs you.
Yeah, and I do, so we've sort of talked about like the internal and the practice management and setting, clear expectations of your staff, of yourself, what's going to work, what's your ideal work-life balance. And I think a big part of that is developing a client relationship or a client engagement. So you're perfecting this client engagement, and we mentioned it earlier, but I think it is really important when you send out those engagement letters or your clients sign engagement letters, which hopefully everybody's using, to communicate very, very clearly what the scope is not uncommon in our line of work. For scope creep is what we call it,
Mhm.
to approach. You're doing a little extra here and a little extra there, and you're talking, multiple times a week, or you're doing little favors. You're not, but you're not charging for it, and all of that takes time. And not only should you charge for it, but it should be something that is very clear to the client. Hey, if I want X, I need to set up an appointment. I need to, follow the rules of engagement in order for something like that to happen. And notify the clients of what is expected of them is really important. What I need the information by this date. I need you to respond to my questions, to my emails, get me the information that, anything I forgot, I need it to be done within 24 hours. Sign those engagement letters, complete the organizers, make deposits or pay fees. If your if your engagement letters says put down 50%, make them put down 50%. Whatever the rule is, you got to stick to it, and dictating it in a very clear engagement letter that describes the exact scope of what you are going to do for this fee can really, really make the client relationship better. And those who don't want to comply with your rules, that's a very good indicator that this is probably not a client for you. And that's okay. That's, maybe that it's just not a good fit, and that's fine. You go to doctors that aren't a great fit. So don't be afraid to push those policies, stick with them, and then those who don't want to comply, reconsider that relationship.
Yeah, because remember, you've probably got people who you're turning away who would follow the
Mhm.
rules. So you're better off to swap. And we're not saying be hard, be
Oh, sure.
respectful, communicate it well, because again, I think you want to tell people you're a professional. So if you look how other professionals act, you mentioned doctors, lawyers,
Mhm.
show up unannounced at a doctor's office or a lawyer's office. Don't show up to an appointment on time. Don't bring what you're told to do, or, go to a doctor's office and they give you the clipboard and 8 forms and you say, I'm not filling these out. Well, guess what? You're not seeing the doctor. Um,
Yeah,
so professionals have to act a certain way, and clients will respond if it's reasonable, if it's fair, and if it's done in a professional way. Again,
sure.
you're not going to say, hey, you jerk, go do this or find somebody else. I mean, I want to give you the chance to do it the right way and keep our relationship going. But I got a lot of other people who would love to have my time and I can't give it to you and not give it to them when they'll do a better job of following the rules than you are.
It's true. I helped an office owner write the nicest clear-cut disengagement letter to give to one of their clients. They were so nervous about the disengagement part, about hurting somebody's feelings or making it, them getting angry with you. And it is true to have a well-written, very simple, clear-cut disengagement letter that basically says, I valued our relationship. Maybe we've gone in a different direction. Please let me know if there's anything I can do to help with the transition to another tax professional, another tax preparer, maybe even make a recommendation if you're like, hey, I know so and so, they specialize in trusts or something. I think, like you said, there's no if you do it professionally, I think that you're not burning bridges. And so something that I would consider is having a well-written disengagement letter that kind of takes the emotion out of it.
Right. And it's okay to be too expensive for some people.
Yeah, sure.
It really is. I mean, again, there's car dealers of all prices out there. We would all wanna probably drive a Porsche, but we can't all afford a Porsche, and that's
Mhm.
okay.
Yeah.
Um, so, you will develop the client base that fits your model, if you have a model that they
Hmm.
can understand and that they can know what it means to comply with your model. So it's your job to make sure they understand who you are, how you provide your services, what you charge for your services, who to contact. Not every client needs to call you. This is where staff development is important.
Hmm.
Can a client with a question talk to somebody on your staff, or again, does it have to go through you? That bottleneck problem again.
Hmm.
So,
Hmm.
uh, again, every firm is a little bit different. So there's not one perfect model or system or things that would apply across the board. That's the challenge we have in Paget. I mean, we've got 170 different people, and they have
Absolutely.
different staff. They have different
Size,
size,
client base.
but they all have a system of that fits whatever their target client looks like and their model looks like, their income goals, their work
Sure.
goals, whatever it is, if you want to be a millionaire, you're going to operate different than if you want to make $50,000.
Yeah.
Um, and all those things fall into it, but you don't want to just get there by accident. You want to, and we're running somewhat out of time. So one thing we got to do is, Annie, talk a little bit about how you evaluate post-tax season, how you did, because you got to start by saying, here's what I'm hoping to accomplish. And then when tax season is over, how do you evaluate if you hit your target?
Yeah, it is something we really encourage our offices to do is sort of like a post-tax season well check or checklist. How did you do? Where is the bottleneck? So I think in order to be able to do that, you need to be mindful throughout the process, making notes, talking to your staff, encouraging your staff to make notes. So, if you're identifying some bottlenecks or maybe issues with your workflow, are you talking about other technology, or are you cursing at this technology all through tax season? And so now tax season over and you're like, well, I need something different. I need to replace this piece of my workflow. Keep all of the, as you are experiencing it through the next couple of months, keep a journal, keep something going so that when tax season's over and you take a breath, you're not like, oh, I'm just so glad that it's over. We're moving forward. Because I think then you just repeat the same pain over and over again. So performance reviews of staff, ask them, what can you do to help them do their job better? Talk to the staff about the client experiences. We talked about this. If there's a particular client that's really just bogging down your staff, then either the client needs more training or perhaps that's not the right fit. Same thing with fees, your marketing plan. If you're trying to bring in more clients, if you're marketing, think about, is this working? Or how did the new clients that we got, what was the avenue that brought them in? Was it word of mouth? Was it a certain advertising avenue? So like especially your work life balance. If your goal is to work 45 hours a week or 50 hours a week, keep track of that. You know, maybe some weeks you hit that goal, maybe some weeks you don't. Nobody's perfect. It's going to be, it's a work in progress kind of thing. But if you don't pay attention to it and make note of it when April 15th comes around, I think you'll lose out on the opportunity to make the next tax season even better. So I think it is an important part of the process, the post tax season evaluation.
Yeah. And yeah, if you're working 90 hours a week, you're not gonna go to 45 in 1 year,
Of
but
course not.
you've gotta see the trend is getting better, that
Hmm.
you're moving towards that. I'm gonna give you a kind of a tip that I think that highlights working in your business and on your business. During tax season, we all get to work, and the first thing we do is run to our office and start doing tax returns or whatever we gotta do.
Yeah.
I wanna suggest to you that everybody, when they get to work, the first 10 minutes you spend together and you say, "How did yesterday go? Is there anything I need to know about? Is there anything that we need to talk about? Was there anything positive, negative?" But take at least 10. You can take 15, take as much as you can. I'm going to say at least 10. Everybody can spend 10 minutes, for God's sakes,
Yeah.
and bring your staff together and say, "How did yesterday go? Is there something we need to change so that we can meet our goals of working less hours and doing all these things?" And then maybe once a month, expand that to bringing in breakfast and taking an hour, or taking them to lunch or something. But take
Yeah.
time to analyze your business in real time. 10 minutes a day is not, if 10 minutes a day is going to put you over the edge, you got a bigger problem.
Yeah, for sure.
If you, but
Yeah.
it also gives your employees a bit of, "Oh yeah, I forgot to tell you this." It makes them feel important because this is about, tell me how your day went and what I need to do to make your day better, and what a client, if a client didn't follow our rules, tell me about it right now and let me deal with it. But take
Mhm.
10 minutes, 15 minutes. It's not a lot of time. Tell everybody, get a cup of coffee, come in your office. Let's look back at yesterday. And if there's something important going on today, it's an opportunity for each of us to share that with the rest of the staff, so we know about it.
And learn from each other is really important, especially for new staff.
Yeah. So this is very doable. I mean, if you're one of those people working these long hours and exhausted, and your staff is mad and angry, by April, you're all yelling at each other and nobody's happy. You
Yeah.
don't have to live that way in this business. You really don't. But you have to spend time making that a priority. It's not going to happen organically.
I agree. I agree. And just I know we're running out of time, but there were just a few points that I wanted to kind of throw out there because they're related to new things. So, for example, I do think with all of the new legislation out, you're going to get wild questions. Social media is not helping. Let's be honest.
Right.
So you might get these weird, awkward questions, or maybe a client is confused about something or heard something. So be prepared for that. We mentioned refunds. Everybody's saying refunds, could be higher. So think about tax planning, like how could that affect next year? But something that you should talk about your clients. If you haven't seen, the IRS is we're not doing paper checks. The IRS is not taking, not sorry, not issuing paper checks, and that goes for all different notices, estimates, all those different types of things. So, if you have a old school client, let's say, who's used to getting those paper checks, getting their refund by paper checks, this year they're going to need to provide a bank account information. And then this one's kind of, I mean, it's good, but it's a little awkward. This just came out. Postmarks, you know how you do a postmark when you mail something?
Mhm.
Well, that is no longer going to be proof of filing. So, my suggestion going forward, encourage all correspondence that goes through the mail to you to be certified or registered mail. It provides an evidence of the exact mailing date. Hopefully we'll get a little bit more guidance. There's got to be some leniency because how do you know which UPS store has the hand stamped postmark, or where do they send it for certified mail? I mean, I think there'll be some confusion, and I'm not going to lie, if I was working at the post office and everybody came in asking for a hand stamped postmark, the line would be out the door. But that is something to keep in mind when you're talking to your clients, just about the best way, if you're especially if you're close to a deadline. If you're months ahead, maybe not such a big deal, but if you're sending in those extensions, on the due date of the tax return, it's definitely worth taking that extra step and getting the certified or registered receipt mail.
And before you yell at the IRS, this is not an IRS issue. This is a mail. This is the Postal Service. The Postal Service, I don't understand the Postal Service that well, but evidently before now, any place you walked in postmarked the mail. Now, some places will, some won't. They get shipped somewhere else. So by the time they get somewhere else and get postmarked, it might be 2 days after you brought
Right.
it in. So if you brought it in on April 15th, and by the time it got to the office where they actually do the postmark, it's the 17th. So now it's late.
Yeah.
Now, the best thing to do is e-file everything. I mean,
Absolutely.
I mean,
Absolutely.
just this is again, trying to accommodate, the old school way of doing things where we used to all drive downtown and stick our payment in the envelope or in the mailbox at
Yeah.
midnight on April 15th. If you file electronically, this ain't a problem.
Right.
But whether it's a W-2 package or a 941 or a tax return, if you're going to take it to the post office on the due date, you better be careful to know whether they will postmark it there on that date or they'll postmark it somewhere else on a later date.
Yeah.
Now, we don't know if the IRS is going to offer any lenience this year. Again, they didn't ask for this.
Yeah.
Came from the post office. So we don't know what the service is going to do, but they do, at least they say they keep all the postmarks when they're late, so they have them. So
Mhm.
I'm assuming if it comes in on April 17th, not the 15th, they're going to keep it and send you a penalty, and then
Yeah.
you're going to have to try to explain, well, I went to the wrong post office. And they say, that's not my problem.
Yeah, yeah. I mean, I certainly hope there's some leniency, but again, this just came out yesterday or the day before. Like I hadn't heard this, so
Yeah.
I mean, there are people probably who are sending in, their fourth quarter estimates or whatever. You never know. So
Yeah.
just keep
Again,
that.
talk to your people who are the old school and they want to go take it and put it in the
Yeah.
mail. This is something you can advise them. Again, it's best way to solve it is let's do everything electronically. But if they
Same
want
with deposit. No more paper check. Like if they're waiting for that check in the mail, you're gonna have to talk to those clients. I need a bank account information. This is how you're gonna get your money. This is the safest way. This is the fastest way. This is now the way.
right.
That's not because we're telling you. It's because this is what the IRS is saying. So we'll
And
go with
get your
that.
clients to all set up individual accounts with the IRS because you
Oh
can do
yeah,
so
it's
much
free
in
and
those accounts.
easy. It's
Yeah.
super easy.
Once you get it set up, getting it set up is still probably more difficult than it should be. But once you have it, you can make payments through it. You can do so much there. You can get transcripts, which helps us. So
Client lost a piece of paper. Doesn't they don't know where X,
yeah,
Y, and Z is. A lot of times you'll be able to find it just by logging into the account. Same with the IP pins. I mean, that's just a safety factor. It really isn't hard to get. It's free, like I said, and it's just another layer of security for your clients. We encourage all of our offices to encourage their clients to do it. I believe everyone can get it except for children under 18. It might be 21. I can't remember, but for the most part, IP pins are simple and easy to get.
and everybody said, well, I don't want to get it because they'll lose the letter. If you give an online account, you can go in the
It'll be
online
in there.
account and get it. So, take advantage of the tools that are out there to make your life easier. Quit fighting it. Just move up to the year 20. We just started 2026. So make sure
Mm,
you're working in that year. You're still not back in
Yeah,
1998 or whatever it is, because
yeah,
there are tools that, yes, going through the transition of setting them up or doing something takes time, but it'll pay tenfold
yeah.
going
In the
forward.
long run. Yeah.
Yeah.
Well, Roger, we definitely got a lot of information out there. I was
Yeah.
worried that we weren't going to get through everything, but I'm grateful for everyone who's listening because I think that this is, not as technical like we said before, but definitely worth giving it some thought on the things that we presented today. I do think if you even implement some of them, your tax season will be far better than the past, and like we said, it's a work in progress. It's not, everything's not going to be perfect in 1 year, but the trend to working less, making same amount of money, happy employees, happy clients, it's out there.
Yeah. And again, work on your business, not just in your business, and
Hmm.
your business will be better. And if this is the kind of stuff, excuse me, that you want us to dig deeper in, because trust me, we were at the top of the water. We weren't going deep down to the ocean floor here in these
Right.
topics. We can spend a lot more time. If you like some of this and want more of this, let us know and we'll
Yeah.
dig deeper into it, because to me, that's what makes being in business fun, that we can make money, have a great work environment, have an equity that people want to buy, and still have a family life. So I think it's critically important. Well, thank you, Annie, as
Thank you,
always.
Roger.
It was great, and to everybody listening, wherever you are and whatever time of day it is, happy 2026. Good luck during tax season. We'll be back with another Federal Tax Update podcast in a couple of weeks, and who knows what we'll talk about then. Annie, we'll figure that out later, right?
Yep. Thanks, Roger, and thank you to all our listeners.
Thanks, Annie. Happy New Year, everybody.